Hey, what if I told you XRP's breakout isn't just riding hype, it's backed by a federal banking pivot that's about to unlock billions in trapped liquidity? Buckle up, because with Ripple eyeing a national charter and Trump's 401k reforms flooding trillions into crypto, this could be the setup for XRP's wildest run yet. How's everyone holding up out there? We're eyeing $3.51 today, and let me tell you, owning XRP right now feels like having a front row seat to the financial revolution. Let's jump straight into this explosive JP Morgan report that's lighting up the crypto scene. It's absolutely authentic, and it positions Ripple and XRP as the prime digital asset for institutional players, especially in optimizing cross-border netting and instant FX settlement through on-demand liquidity corridors. The analysis points out how assets like Bitcoin hit walls from regulatory hurdles around anti-money laundering and know your customer standards, but Ripple's embedded compliance structures make XRP a frontrunner for institutional capital deployment. Picture this. Ripple aligns with Basel III compliance standards and ISO 20022 implementation, making it ideal for treasury management solutions that global banks are desperate for. This isn't mere speculation, it's paving the way for XRP to skyrocket. In the last year, XRP has trounced Bitcoin by 153% and Ethereum by 112%, all without a US ETF, broad treasury adoption, or a thriving DeFi yield ecosystem. But here's where it gets wild, that's all set to explode. Securing a national banking charter and FedMaster account would grant Ripple direct entry to Fedwire and FedNow, enabling RLUSD issuance and embedding XRP fees into enterprise flows. This is grounded in reality. Ripple submitted those OCC and Fed applications on the 2nd of July, 2025, with a review timeline of 6 to 18 months, and the Genius Act mandates the OCC to prioritize chartered entities for systemic stablecoin operations. Kyle emphasizes that Ripple's transformation from a payment specialist to a stablecoin powerhouse is slipping under the radar. But if these regulatory dominoes fall, capital influx into the XRP ecosystem might be among the most explosive. Transparency time. Folks, I'm an early Ripple equity investor, so naturally, I'm cheering for their triumph. And I firmly believe their current moves will turbocharge the equity arm. I broke this down in an earlier video on XRP token demand and how RLUSD could slightly erode its utility, but frankly, I think it's irrelevant. The momentum, the buzz, and that ironclad XRP army, the community is unstoppable. Ripple hasn't snagged an ETF yet, but treasury integrations are surging, like Nature's Miracle Holdings' $20 million XRP reserve for corporate treasury diversification. Trident Digital is amassing $500 million for an XRP-focused long-term fund, and China's Webis International is pursuing $300 million in XRP for settlement infrastructure. With altcoin season brewing and XRP's massive US popularity, I'm convinced it's geared for an epic surge. Now, on to fresh intel on volume and supply. I've been dissecting how much XRP truly remains on exchanges. Current data pegs circulating supply at 59.24 billion out of the 100 billion cap, but exchange reserves are at rock-bottom lows around 3.4 billion XRP. That's a mere 5.7% of circulating supply, folks, a fraction of what you'd anticipate. Outflows have been enormous. Whales and institutions are extracting XRP from platforms amid regulatory green lights from the three crypto bills. This shrinks the freely tradable pool, priming a supply crunch. And here's the kicker. With a fixed 100 billion ceiling, Ripple's escrow locks away about 35.91 billion, with monthly unlocks limited to 1 billion and relock rates historically over 70 to 80%. We covered this a week or two ago, unpacking the real available XRP for purchase. Sure, some holders park it on exchanges, but those tens of billions pools aren't fully liquid. Analytics confirm massive outflows, like the net 5.736 billion XRP that departed top exchanges from the 18th of June to 2025, the biggest since 2019, though a CryptoQuant glitch briefly inflated the number. Whales are hoarding. A single 24-hour period on the 26th of July saw them scoop 130 million XRP as prices dipped to $3.04. Institutional market maker stocks have tripled since 2023, with Coinbase custody securing 8.5 billion XRP for clients by July 2025. So, grasp this. Far less XRP is accessible than folks realize. As demand ramps from this news barrage, prices will climb. Remember, Ripple doesn't dictate retail prices, as the protocol scales for on-demand liquidity corridors and cross-currency settlement efficiency. XRP demand organically surges. That's direct from their breakdown. Each RLUSD transfer on XRPL incinerates XRP as the base fee, amplifying demand via network fee reflexivity. Cowboy Crypto hit the nail on the head. XRP just breached $200 billion market cap, excluding fully diluted value, for the first time. That's monumental. Now, could XRP overthrow Ethereum? Let's dissect this thread. XRP might eclipse Ethereum as the leading altcoin in 2025. Ethereum's dominance is fracturing under scalability bottlenecks, gas fees that topped $200 in 2022, and upgrades that haven't fully materialized. Users and developers are migrating, but think about this. Many are flocking to the XRP ledger with its fresh EVM sidechain, which deployed 1,400 smart contracts in its debut week post, the 30th of June, 2025 launch. Ethereum's proof-of-stake transition aided, but bottlenecks persist. Average gas dropped to 1.3 GWh now, yet rollups boost aggregate TPS to 70+, while XRPL tests burst to 400 TPS. It's evident Ethereum can't expand fast enough for surging demand, while nimbler rivals like XRPL advance with carbon neutrality and institutional migration strategies. XRPL is built for global financial reliability. Cutting slippage and impermanent loss in DeFi models indicate it beats Uniswap-style pools by up to 67% in volatile conditions. Ethereum's DeFi layer seems antiquated, with TVL at $105 billion across mainnet and L2 second, but XRPL's AMM is pulling liquidity swiftly, reaching $94.4 million TVL by the 22nd of July, up 68.3% month-over-month. Lower fees, superior efficiency, and that institutional advantage, it's a formula for supremacy. Heed my words, you'll feel the urge to sell when XRP shatters all-time highs and multiplies 5x fast. Trust me, don't get sidelined. Trump's executive order will permit 401k and retirement accounts to flow into crypto, potentially channeling trillions into the market. This alters the landscape and vision, that influx hitting as XRP grabs headlines, with Ripple collaborating with California's Governor Newsom for DMV title transfers on the ledger. Ripple's in elite discussions, Ethereum envies, like multilateral CBDC pilots with Maspis Project Dunbar, where XRP serves as a wholesale settlement token. Lightbulb moment. President Trump's order, slated for signing soon, instructs the DOL and SEC to authorize alternatives like crypto in managed 401k plans, tapping a $9 trillion reservoir. Even a 1% shift means $90 billion pouring in, surpassing current spot BTC ETF assets. Spot XRP ETFs aren't approved yet, but with 95% odds by late 2025 and filings from WisdomTree, Franklin, and Bitwise in review, it's imminent. Ripple's advancing that banking license filed the 2nd of July, 2025, and landing a FedMaster account would enable custody of RLUSD reserves at the Fed, slashing credit risk haircuts. Imagine pitching a financial institution. We're a bank like you that fosters trust, unlocking avenues for risk-adjusted returns and portfolio diversification matrices. Ripple's prepped this for years, submitting business plans and service outlines for the charter. Now it's execution time, and the thrill is palpable. But first, let's unpack more from the Catalyst matrix. Ripple's national bank charter and FedMaster account could add $5, $10 to XRP price by enabling banks to route stablecoin settlements via XRPL, PER, probability-weighted scenarios, at 60% likelihood. RLUSD scaling to $10 billion market cap, currently at $580 million, with 4,100 holders, and BNY Mellon as custodian might lift XRP by $2, $4 through fee burn reflexivity, with 70% odds. US-listed XRP spot ETPs are projected to draw $48 billion in first-year AUM, potentially boosting price by $6, $12 at 55% probability, based on Bitcoin and Ethereum adoption ratios. JP Morgan's crypto collateral lending program, targeted for 2026 rollout, validates XRP as balance sheet collateral, possibly adding $1, $3 via reduced float velocity at 45% odds. Hidden Road's prime broker integration, post-April 2025 acquisition, could tap $3 trillion annual FX flows into XRPL, demanding RLUSD, XRP liquidity for margins, and adding $3, $5 at 65% probability. MiCA and Genius Act convergence creates a passportable compliance template, embedding XRP as an ISO 20022 ready bridge for PSD3 and FedNow rails, with 80% likelihood of a structural floor above $5. CBDC corridor pilots, like MassBIS, Project Dunbar, position XRP as a neutral wholesale settlement coin, offering convex upside of plus in dollars at 50% probability. Diving deeper into the national banking charter, Ripple's OCC filing seeks the same supervisory tier as BNY Mellon or State Street, with parallel petitions for a Fed master account to enable 24/7 RLUSD issuance without correspondence. Approval would make Ripple the first crypto-native entity to settle fiat and stablecoins inside the central bank ledger, closing compliance gaps hindering wholesale adoption. Precedent from Anchorage Digital in 2021 lowers friction, and the Genius Act compels OCC favoritism for chartered stablecoin issuers. However, the American Bankers Association lobbied for delays, citing transparency gaps, so a phased approval is plausible. On RLUSD's flywheel, launched December 2024, it now exceeds $577 million market cap with NYDFS BitLicense Plus rules, including monthly attestations and segregated T-bill reserves. Multi-chain issuance on XRPL, 0.00012 XRP fee, and Ethereum, with plans for Solana and Avalanche, always finalizing on XRPL. Institutional guardrails via BNY Mellon ensure Basel III compliance segregation, opening money market fund wrappers. Every XRPL transfer burns XRP as anti-spam fee. At 200,000 daily RLUSD moves, 1% of USDT load, annual burn hits 730,000 XRP tilde, $2.6 million, tightening float as market makers hold XRP for offers. Shifting to spot XRP ETPs, JP Morgan forecasts $48 billion first year inflows based on 3%, 6% adoption seen in BTC, ETH ETFs, generating $5,100 million annual issuer fees. Regulatory signals are positive. Taurus's 2023 ruling classified programmatic sales as non-securities, and SEC guidance treats bridge assets as payment tokens. BlackRock, Grayscale, and VanEck amended S1 second referencing XRP status in June 2025 WAGMI proposals, indicating SEC logjam easing. Approval could create direct demand by draining order books and tightening spreads via offshore perpetual arbitrage. Now, here's where it gets interesting. JP Morgan's crypto collateral loans pilot accepts XRP for credit lines, sidestepping Basel III's 1,250% risk weight on direct holdings. Corporates can lock XRP instead of selling, reducing velocity. Hidden Road's $250 billion daily FX volume, migrating to XRPL post-acquisition schedules, RLUSD collateral trials for Q1 2026, 2% shift tilde, $60 billion, would bid up on ledger liquidity, spiking XRP volumes and burns. CBDC corridors add tailwinds. BIS Enbridge and Oliver Wyman blueprints identify neutral bridge assets for multi-CBDC FX. XRP's instant finality and ISO 20022 messaging fit pilots, like SARTHBUSD, potentially routing tens of billions annually with XRP microfees. Macro unlocks $27 trillion in Nostro accounts. 30% release via XRPL could yield $1.5 trillion in transactions. Trump's posture urges OCC incubation of crypto innovation, influencing charter decisions. Risks include OCC denial, high severity, mitigated by state fallback, RLUSD depegging, high, countered by 100% backing and daily reconciliations. SEC reversal, medium, buffered by pro-crypto climate, Basel tightening, medium, via off-balance structures, and hidden road delays, low, via phased integration. Valuation scenarios. Bear case. Charter denied. RLUSD at $1 billion. No ETF. Implies $2.20 XRP with 1.5 MTX. Day and 15 Kelvin daily burns. Base. $7.50. Assumes conditional charter. $5 billion RLUSD. $4 billion ETF inflows at 4 MTX. Day and 40 Kelvin burns. Bull. $19. Factors full charter. 2 billion RLUSD, $8 billion inflows at 10 MTX, day and 100 Kelvin burns. Blue Sky, $50, adds MCBDC corridors and sovereign adoption at 25 MTX, day and 250 Kelvin burns, assuming 0.9 elasticity between burn rate and price. Milestones to watch. SEC VanEck XRP, trust decision by the 30th of September. OCC Charter Comment Summary Q4. Hidden Road Test Swaps Q4, Fedmaster Verdict H1 2026, JP Morgan Collateral Pilot H1 2026, ASEAN CBDC Scale Up H2 2026-2027, RLUSD $10 billion by 2027. For positioning, monitor escrow relocks for accumulation windows. RLUSD, XRP liquidity providing earns fees plus float. Growth upside, diversify with RLUSD, USDC, treasuries to hedge. The intersection of legitimacy, infrastructure, and rails shifts XRP from remittance token to systemic utility. Charter or ETF approval now plausible would embed it deeper, fueling prices well above current levels. If this deep dive fired up your XRP passion, hit like, subscribe for the latest breakdowns, and comment XRP Moonshot to rally the troops. What's your 2026 price target?
And you guys, I have a special trick for you, which nobody seems to be using, and I cannot wrap my head around why, because if you sign up through my link down in the description onto the BTCC exchange, you get a 10% deposit bonus, and now stay with me here. Now here comes the important part. If you have any trading capital on any other exchange and you move it to your newly created BTCC account, you get on top of your capital, you moved another 10% extra trading capital. As an example, so if you move or deposit 100K to your account, you get 10K for free. I'm not kidding. I really don't understand why nobody's doing this. To me, it really seems like people sometimes are too lazy or just don't like free money. I mean, like, I cannot make that account for you. You will need to do that yourself, alright? So let's jump back into the video.